Anyway, I thought this will benefit everyone because this came many times now, which is how to use the Monte Carlo analysis to get the proper capitalization. So here I put an example. This is, everybody knows this strategy by now. I put it many times on the channel. RSI 2 below 25, RSI 2 exit above 75. So you see money management, if I put 10,000 in, nothing will change here because StrategyQuant X does not factor that in. Like it will trade every single signal regardless. Like, okay, just to let you know that this is on ES and the initial margin for ES is 12,650. So theoretically with 10,000 no signal should come up. Like you cannot trade this strategy anyway. So this is a huge disadvantage in SQX. Like I don't know why they have this when it doesn't take it into account. What's the point? There is no point here. If I switch this from 10,000 to 100,000, I tell you what will change. Just look at this compound annual growth rate. That's the only thing that changed. Why? Because now it's dividing the profit over this number. So that's the only time when SQX takes this number into account. In stocks, if you trade this one, stock size by price, it will take again this one. In futures, it's meaningless, and I know why, because SQX actually was a forex data mining package, so it doesn't work for futures. And why that important is, so let me show you something else here. So this portfolio trades 4 strategies. And if I go correlation, 5 strategies. Okay. So there's triple Q, which is NASDAQ 100, diamonds, which is Dow Jones, and then the SPY S&P 500, and it takes 6, 7, and 8. So it's 5 strategies. It's the same thing. This one takes 6 days, this one takes 7 days, this one takes 8 days, and these two are 7 days. And these are all ETFs, so they are stocks. And you can see I'm trading them with different account size, like I told you, because when you use this setting on stocks, it works. But in order to make sure how it's working, I imported all those trades. So all those trades, I brought them in here, which is the market system analyzer. That's currently the only software that you can do this properly. By the way, this is not also perfect software. There is no perfect software. There is no such thing. Even this have many, like I would say, I don't know. Oh, okay, the biggest thing here is it doesn't show you the drawdown. But in any case, so you want to find out this portfolio is profitable. I saw it on the channel. It's making 11.62 compound annual growth rate. I want to trade this. The drawdown currently here is 23.29%. Okay, so here now, the starting account will make a huge difference. So look at the net profit here, 62,000 net profit. Now, if I start at 25,000, my profit is 112. Totally different. The graph at the bottom shows how many shares I am buying. Okay. Now, if I start at 40,000, remember here we have net profit of 112 and drawdown 1369. Now my net profit is 167. Drawdown is 1415. And if I start with 100, Net profit 195. Drawdown went down to 8.8. So this program takes this into consideration. This makes a difference. Okay? And also I can go back, for example, here, and I can trade a fixed, no, this is trading a different number of shares. Here I'm trading only fixed number of shares, 100 shares. Again, it makes a huge difference. Net profit 26, maximum drawdown now 12.74. So, and also, of course, we can see, we can check the trades. So these are the number of shares, cost, and margins, and it calculates everything properly. So in stocks, again, if I go back here and let me start with 2,500. This program still trades. Why? Because at 2,500 I can buy these shares. But let me take it back to 500. See, that's it. It stops trading after a while because there is not enough money. And that's how you know that this is working. While in SQX, here, like I mentioned, it doesn't matter. As long as there is money, I can start with 1,000. Oh, now it makes a difference. Oh, because I took the stock size. But fixed size 1, this will not make a difference. I can start with $500. Remember, this is futures. In fact, I can change this to SPY, which is again the ETF. Okay. And fixed size of 1. Let me take the commission off. So this is it's trading properly, and now I change this to $50. It doesn't affect it, you see? So SQX doesn't take this starting point into account. That means whatever the strategy is, you don't know how much money you need to trade the strategy. The only way to find out is through Monte Carlo testing. That's to find out how much capital. But actually, even for starting capital, you cannot tell with this, with SQX. Now, as I mentioned, so for stocks, it's kind of easy. I mean, you can do it in Excel. You know, you can start with 1,000 and see all the trades and see how much you can get. It gets complicated in futures. So this is the RSI 2 on ES. So this is this strategy on ES. On ES, now on futures, there is something called the initial margin. So this software takes that into account. So here I put the 12,650 initial margin, meaning what? If my account drops below 12,650, even if it goes 12,600, it will not trade anymore. So that is not zero. You theoretically, you lost $50 from your account only, but you cannot trade anymore. Because that's the real life scenario, is when your account below initial margin, you cannot trade that account. I know during the day you have $500, and we're not talking about that. Let's say you're trading daily, you're holding overnight, you need the initial margin or the maintenance margin, whatever they call it. So you need that number in. So this strategy takes this into account. So right now you see my account, I put it on purpose 12,650. So you might say, still, how this is trading 12,650? I mean, what, you didn't lose any? And it is true, because this program started winning already. So you can see here, it made 500, 1,300, 640, 200, 900, and then it lost 147. So that's why you can start with exactly the same amount of margin. So say SQX took this into consideration and 12,650 works. So even that is not true, because this scenario will not be replicated in the future. It will not be exactly 5 winning trades and then 1 losing trade. So then Monte Carlo comes into play. And what simple Monte Carlo will do is it will shuffle those trades. It will do nothing. Here we are shuffling the trades 500 times. And I am calculating maximum drawdown to be at least 25%. And let's put risk of ruin. Risk of ruin does not mean your account goes to 0. Okay, it just means, like I mentioned now, you cannot trade anymore. So if I shuffle the trades only 500 times, let's forget this for a second. Let me explain this to you. I hope you're seeing this. I know it's dark gray. So you can see there is a red line on the top and there is a green line on the bottom. So this is the confidence level at 98 and 2%. Of course, I set that in, yes? So this is, you can set your confidence level here. What that says is 98% of all the curves in the future when you shuffle will fall between this red line and the green line. The green line went down here. That means we cannot trade anymore. And in fact, if I see the curve, I can see it more clearly now. If I'm trading with 12,650, if I'm starting this strategy on the ES with 1200 and 650 at 50% confidence, that means 50% of the curves in the futures, of the possible curves in the futures, lose money. That means I lose, it's a coin flip. If I start with 12,650, even though this strategy is really good, I know it's good, I tested it, it's robust, blah, blah, blah. If I started with 12,650, I have 50% chance of not, of losing my money, of not be able to trade anymore. Okay, so let me start then with, I don't know, let's start with 20. So now 70% chance I will make money, 30% chance I will end up losing money. Remember, it's the same strategy. I'm just changing the starting capital. And now let me make it 30. Now I am 96.5% confident that I will end up making money, but still I have 3.5% that I will lose money. So here, risk of ruin, remember I put risk of ruin here as 2.5%. So I am accepting 2.5% in the future that I will face risk of ruin. Of course, you can make this 0, but I'm just telling you how am I calculating this. So let's go to 40. This is now starting the account with $40,000. At $40,000, 99.6, I have 0.4% of ending up after all the trades in ruin, meaning I cannot trade anymore. And of course, you can get more detailed numbers here. So actually all the KPIs are here. No need to go through it. But anyway, you get the idea. So basically what this told me now is the same strategy. If I started with $15,000, it was 50%. It was a coin flip to lose or win at the end of the trades. Any future scenario. Now, this does not mean, let me bring back, let's put 15. So let me show you the curve. So right now, what does this say? It says below 60%, I am confident to make money. Somewhere between 50 and 60%, I'm not confident. And that does not mean it's going to happen somewhere at the end. For example, You can see this curve, the green one. It's actually happened here somewhere around trade 2. I could not make money. That's it. Because if you have 2 losses, that brings you down from $15,000 below $12,600. That's it. You cannot trade anymore. So it could happen at any point in time. It doesn't have to happen at the end. So from this analysis now that I did, if I want to trade this strategy on the ES and I'm willing to accept 0.5% risk of ruin, I should start this strategy with $40,000. That is solution number 1. Okay, I took the strategy. I understand now this does not make any sense. 10,000, 12,000 doesn't mean anything. I need actually to trade this strategy without risk of ruin. I need $40,000. In fact, to make it 0, let's try 45. And even 0, I still have something. Sorry, at 45. So let's try 47.50 probably will do the trick. No. 50. I know we are close because it's like 0.01% left. Okay, there it is. So to guarantee that if I face the same trades, that means the average trade is the same, consecutive losers are the same. If the strategy basically is reliable, that's what I'm saying. I tested this strategy. If it's reliable, that means it's not going to repeat the history, but it's going to repeat the same KPIs. That means the average trade should be very close. Consecutive winners and losers should be very close. Then $50,000 should be okay to start this account and trade this strategy comfortably. That is assuming you are trading one contract. But what if I want to trade more than one contract? So let's say I take leverage 2-to-1. That's still good. But now at 2-to-1, look at my 50%, I get 94,000. But the further I go in confidence level, the less net profit I make. That means this leverage 2-to-1 position sizing is not good for my strategy. Of course, there are many ways to do this. Doesn't matter, but you know, they all produce different scenario. Look at this one. This one, 520,000 at 50% confidence, but then it loses money at 94% confidence. Meaning what again? Meaning the position sizing will again alter your starting amount of capital. So you cannot use the same amount of capital, which we agreed on was 50,000 to trade. Now, if you want to implement position sizing, then you have to have different starting capital. Now you might say, okay, well, now what? I should go to $100,000. I don't have that. There are other tricks to implement. This is, let's say, a little bit advanced. But for example, you can say, something happened. Yes. For example, here you can say, don't trade. Let me show you this. So trade one contract up to, let's say, $100,000. Meaning don't start the position sizing until I am at $100,000 level. And in that case, then I can implement different position sizing that makes sense. So same one, like remember, just I did a second ago. See, now it has different, before it has 520 here, now it's 284. But what's the difference now? The difference now, at 100% confidence, I still make money. So that's good. I can use this position sizing, but I will only implement it when I reach $100,000, even though I'm starting with 50. So you see, the scenarios in this software is very practical. It takes everything into account. And Of course, there are slippage and commission you can add, and there are many scenarios you can do here. But this is reality. You cannot take a strategy here and just go and trade it. You will, I mean, it will depend on luck basically, but then you're playing with fire. Yes, it's basically luck. It's not trading anymore. So that's where Monte Carlo analysis come into play. It's to figure out how much money you need to start with. Now remember, this strategy RSI2, I did it on one symbol, but this is a portfolio. So it's the same equation for a portfolio or for one strategy. Of course, you're always trading a portfolio if you listen to me. So then you're going to do it on your portfolio. You're not going to do it on single strategies. You combine all the trades of all the strategies, and then you do the simulation on them. Now I know SQX have their Monte Carlo thing. I forgot the name. Anyway, I'm drawing a blank here. But anyway, they have another package. Maybe if we can go to their website.
It's Quant Analyzer.
Yes, Quant Analyzer. Thank you. So Quant Analyzer, this one, you can do some of what I did here. Unfortunately, it's not thorough. So in the beginning, here is why what my recommendation. I mean, this software is I think $300 now. I remember somebody posted that there is always $100 coupon if you sign up. So I think it becomes $300. If you don't want to spend the $300, then you should start with trading an ETF, because ETFs you can trade them, $3,000. Of course, also Forex, because you have micro lots, mini lots, but don't get into future unless you have this package. That's my recommendation, because then, or you have like something else that do the analysis like this, because with futures you have initial margin all the time, and they are usually like a big amount. Like even if you go mini, it's like $3,000 sometimes. So, but for stocks, I didn't do Quant Analyzer a lot, but I think in stocks you can do the portfolio testing and to find out the capital requirement. And let me see. Yeah, so just remember this. The starting capital affect your risk of ruin, confidence level, affect your net profit, affect your drawdown. Okay? Always, regardless of what you're trading. Stocks, futures, crypto, it always has that effect. It's the curve is the so if I want to draw, let's see, if this is a capital, so when the capital goes up, usually your drawdown here goes down, your net profit goes down, or goes up if you are using position sizing or if you're using the whole capital. So this is depending on what position sizing. Like if you're always trading 100 shares, then your net profit percent will go down. But if you're using position sizing, then depending on what position sizing you're using, theoretically it should go up with the capital increase. So it's a dynamic curve, what I'm trying to say. It's not fixed. Before we go to the questions, let me give you a couple of minutes if you have any questions here. And let's see, LT. So can we use the Quant Analyzer in place? Oh yes, we just answered that. Unfortunately, yeah, I don't know the full functionality. I mean, I've tested it once. I know you can do Monte Carlo of a portfolio The problem, like I'm 99% confident that it doesn't take the margin, the futures margin into account. Even for stocks, I don't think it takes that into account. If you're trading fixed amount of shares, if you're trading 100 shares and you build a portfolio, you take it to Quant Analyzer. Quant Analyzer will not look at your starting capital. It will only look at it in terms of how much money you made divided by the starting capital. That's your compound annual growth rate. That's the only time it takes it into consideration. How do you copy SQX trades into MSA? So you export. Here you have all the trades. You export as CSV. And then in TradeStation, this program comes with a TradeStation MultiChart. It comes with a function that exports the trades from TradeStation MultiChart. But if you have any trading platform, doesn't matter SQX, you can import. So let's build a new one. So here it will give you this. And I like this. This is one of the best implementation of import, because I've seen others where they give you a template, and this is, to me, it's much better. Here you have all these columns, and then you can define this is the symbol, and then this is the side, and then this is the start entry date, and open price, entry price, close time, that's the exit date, close price. And then inside the program, that's what I do. So you can take the profit and loss here. It's profit and loss. Where am I missing?
Sorry, on the fourth column you picked profit and loss.
Oh, okay,
So
mine, yes, that's why. So this would be short, long, and short. And profit and loss now should store, yes. So this is the best way. Now, once you import, you can use this profit and loss, or you can let the program calculate it, because now you have the open price and close price. And that's really important when you're doing position size and the Monte Carlo testing. So, for example, Monte Carlo in SQX only takes profit and loss. Yeah, so then you import it and that's it. Oh, you skip here. This one, first line. And then the one without label will not be imported. And then it will show up like this. So data source, it's here. You can update. And you can add new trades. This one. You can edit the file format. It's, I mean, like I mentioned, this is the best available at this price point. And I think it's really good. If you're trading futures, definitely I think it's a good investment. For stocks and Forex, I think you can get by in the beginning. I mean, obviously at the end you want it, but in the beginning. There are drawbacks to this software. It's not, first of all, it's slow, so it chokes on when you open many tabs and many trades, because it's written, I don't know. Just to let you know, it's not been updated for, I think now 2 years. So he's one guy, same guy who does Adapt Trade, and he doesn't do a lot of updates. It doesn't show like the median. It doesn't show the median maximum drawdown. It doesn't actually show you the drawdown anyway. Like there is no curve for drawdown. It only shows you the maximum here. So it has its own drawbacks, but it has also, look at this. So for example, I can start from trade 100, or I can start from a certain date. So I can start here. Anyway, so it is good. Can you expand MSA with other money management strategies? They have, no, they have, it's a good chunk. They have also equity curve, but I don't believe in that, so I don't use it. So basically this, you can trade the equity curve. But no, these are the only position sizing you can use. Okay, so I think this should solve that question. So remember, this is really important, your starting capital. And now let's go to some questions. So LT, when you are creating portfolios, let's say for 4 different strategies, what KPIs are real? That's good. It doesn't calculate initial capital or strategy, calculates only for one strategy and then last dollar. So the KPIs here are correct. For example, average trade. It is correct. What's not correct is maybe, well, let's put it this way. If you're going to trade this strategy, obviously you're going to give it the right capital. Okay? You're not going to trade this strategy blindly. So that means I'm assuming you're already going to have the right capital to trade every signal. In that case, if you're trading every signal, then the average trade is correct. Yes, you're trading fixed contract, 1, you're taking all the signals. This means that this number is correct. Also, the drawdown is correct. Everything else is correct except for this one, because this one takes the initial amount of capital. But the other KPIs will be correct, like standard deviation, profit factor, number of trades, drawdown percent. So these will all work. Now, what will you take as the correct API? This is not an easy answer, but definitely you need more. Like we mentioned this, yes? The more you take, the higher the resolution will be. But extremely important things are profit factor and average trade, consecutive wins, consecutive losers, and drawdowns. Now also, I just did the interview yesterday with CloneX, and he mentioned that he has a snippet on the code base, and that snippet calculate the number of complexities, which from his research he says it's a good predictor. So currently, okay, what I'm advocating always is what is 1 to 2 conditions for entry and 1 conditions for exit. But that is general. So he made it like mathematical. So the snippet will show up here in a column, and it will tell you, okay, this strategy has 4 or 8 or 10 complexities. So that's also a good predictor. That predictor is not good for monitoring. That's only predictor for robustness. But to monitor the strategies, you still need to go back and to the KPIs. You still need to, like, once you build the strategy and it's robust, now we have this complexity snippet to calculate robustness, let's say. But once you're trading the strategy, you still need to figure out the capitalization, and you still need to monitor the strategy because, and again, this is very important, all strategies, you should come from this point of view. All strategies will break at one point. So you need to protect yourself by always monitoring the strategies. And for monitoring, like I told you, I'm working with CloneX for a snippet for monitoring in SPP, but still doesn't look close. There are structural issues with SQX that he is not able to make it happen. But at least in the beginning, you need to take those KPIs to monitor the strategy. LT, can you show an example how to use automatic optimizing for simple generated strategies? So this strategy, I don't know. Let's pick these guys. basically what I do here is I want to find a stable region. So for example, this is the 80-20 strategy. It's so let's say I want to, instead of 0.2, let me go to 0.05 to 0.4 at a step of 0.05, and instead of 0.8, let me go 0.6 to 1 at a step of 0.05. Okay, I did the strategy. It uses 0.2 to enter, 0.8 to exit. But now I want to find if what I picked, maybe it's a peak. Like I did it by chance, it came out good. Or maybe I saw a video on the channel and it looks good. Well, let me see how robust is that value is. And then you can... oh, I didn't... remember to do this when you load the strategy. What? You need to apply it, because otherwise this strategy will trade this data, which I know this strategy is not for oil. And so again, well, let's take the recommendation. It's just a test anyway. So now when you run it, it will show you that optimization profile. And so I can do the surface. And so now I can see, oh, so where is 0.2 and 0.8? So 0.8 sits here. It's actually not the peak. Okay, it's in this one. And 0.2 is... where is it? It's this one, also the middle. So good. So both of them are not peak. So the peak is this. It's 0.6 and somewhere here 0.23. That's the peak. So that's what I use optimization for. Like I don't use it to bring a strategy and then optimizing the best so I can trade it. I only want to find if I'm sitting on a peak or not. This works really well when you have one or two data points. So for 2, you can find it really easy. So let's say if 0.2 was a peak, so this will be this high, and then this one will be somewhere here. So I know this is a peak. So for 1 or 2 variables, it's easy to see your robustness with this one, with 2D. 3D is for more complicated. More than 2 or 3, then you definitely need SPP or workload analysis. I noticed that when I put ranking filter on average win greater than 120% of average loss, I get some nice equity curve. Average win 20% greater than average loss. Yeah, definitely. Because on average you're making more money than on losing, so definitely it should be good. Okay. Probably not totally surprising. What about the average trade metric? I'm not sure what this means exactly. SQL documentation, average trade on important metric to keep track. Yes, average trade is important, obviously. Average trade is taking all trades. So you have let's say 100 trades. Let's say you have 56 losing trades and you have 44 winning trades. So total is 100. And losing trades, let's say, I don't know, they lose, let's say $5,000. Winning trade, they make $6,000. So then the average trade is total of this, which is 1,000, divided by this, which is 10. So 1,000 divided by 100 equal 10. So this is your average trade. Now there is average win and average loss in dollars. which is dividing 5,000 by 56. And that's your average loss in dollars. And then you have average win in dollars, which is 6,000 divided by 444. And that will be your average win in dollars. Now, average loss percentage is dividing 56 by 100. And average win percentage is dividing 44 by 100. So this is the average trade in dollars, and it tells you basically all the trades, total of all the trades divided by total number of trades. And it is it's a KPI, just like all other KPIs. You need it to stay consistent. So you cannot have, let's take this for example. Here you have 44 trades. So of my 44 trades, I expect them all to be like this. Okay, so then my median is somewhere here. And then let's say this is one standard deviation. So in future, my average trade, I expect it to be here 67% of the time. And this is the 2 standard deviation. So that will be 95% of the time. So if I am above 2 SD, something is wrong. It could be nothing, but it's definitely a flag. Yes, it's definitely a cautionary number. I need to make sure that something, the market didn't change, the code is correctly, I didn't lose internet connection. Something went wrong if my trade shows up here. Even if it's positive or negative. Something is wrong when my trade shows up in the 0.1% only. So it is an important KPI to keep track of. Should I include in the ranking filters? That is, so I don't use it. Because there are two different things. Robustness is not the same as monitoring. See, in the beginning when you are testing here, your whole goal is a robust, profitable strategy. That's it. That's your whole goal. Probably this one could have 50% drawdown. Yes, this strategy could be robust, profitable, but has 50% drawdown. So getting out of SQX has a different goal than trading. In the beginning, you're building robust strategies that are profitable. Now, some of you might also focus on the drawdown right from the gate, starting gate. So some of you probably will build with no more than 10% drawdown. I don't do this. I mean, I try to reduce the drawdown, but I don't target the drawdown. Because most likely then you're overfitting too much, I think. Because drawdown, you can reduce it with position sizing or capital. Same drawdown, same this strategy with a drawdown of 50%. I can double my starting capital and it will go down to maybe 20%. Just like I showed you in Market System Analyzer. So what you need to focus on here is robustness from SQX. And robustness, I have, like I can tell you, I told you many times before, profit factor is a huge indicator. And right now, I didn't test it yet, but hopefully Clonex snippet, the complexity, probably also it's a good indicator. I mean, theoretically it is, because I know already, I already preach like low number of variables. I just didn't test it yet to vouch for it. So, but robustness is different. So average trade, I don't know, because profit factor covers average range. I mean, how would you get 1.3 profit factor? You definitely have a positive average trade. That's the only way you're going to get a good profit factor. So you can use it. Let's also make one point clear. This is like there is no university you can get in and you get a standard method that everybody follows. Like you talk to, 5 extremely profitable traders, and each one does it differently. They follow the same concept, but they do it differently. And that's why, like I told you before, the cross-check is not meant to be used all in sequence. This is because, some traders prefer this, some traders prefer that, so they're trying to cover all opinions, basically. So you need to find your own path, but starting from the right foundation. So what do I mean by that? So right foundation means, okay, look, well, I listened to Ali. He said minimum number of variables. That's a foundation. Don't pick a peak. That's a foundation. How are you going to find that peak? I find it in SPP. You might do it in Excel. Somebody else might write a Python code for it. It's just totally different. Yeah, how are you going to find that peak? But the same concept still there. It's don't trade with a strategy that picking the peak variable. So I'm not saying average trade is not good. I'm just saying I don't use it, but you can easily use it. You can say here, whatever, even this maximum. Last time I think we did this, I wanted to prove a point of Monte Carlo is not working. But I don't use actually maximum consecutive loss in average trades. I prefer to let these come organically. My focus is definitely profit factor. Now, there is an easy way to find out. It's not blind science. So let's say you start with me. You start with profit factor 1.3. Okay? I'm going to give you 2 more in the course, but let's say you stick now with profit factor. You can easily do 100,000 strategies. Bring the trades into Excel. I did one video on this on the channel. Just type correlation, probably you'll find it. And then just do correlation between profit factor and average trade and see if they coincide. So theoretically what you want, we know profit factor works. I mean, I know, I can tell you, I can vouch for it. I know profit factor is a good indicator for robustness. So if you do profit factor here and it lines up well with average trade, well then that means also average trade is a good predictor because it is correlated, positively correlated with profit factor. So actually you can test all these in SQX. Once you have your robust testing here, ranking filters, then you can try many, like you can try consecutive loser, you can try all these conditions and find out which one that you like that correlates well. You don't need 100% correlation. You need a positive. Anything above 0.7 will be good in my opinion. Like if average trade is 0.7 correlation with profit factor, that's good. It doesn't have to line up with it all the time, but it's a good indication. So under custom project, is it possible to do a workflow which first calculates a fixed stop loss? Yes, we can. And then uses those value in the build task. Yeah, it's in Builder, yes. So custom project is only automating Builder. So in Builder, of course, you can put a fixed stop loss. I can do 1440. That's fixed.
Yeah. So Ali.
Yes.
What I mean by that one is, yeah, I know I can do that. That's what I'm doing at the moment. But I'm doing the task of deriving the pips in Excel first. So So what I want to do is to say, if I go to custom projects and I add maybe, I don't know, maybe it's the custom coding, whatever task, and have it calculate the, say, the median movement in the price, and then use that in the builder.
Yeah. No, you cannot use any variables there. The one you can use, so I'm not sure, I'm just thinking out loud. After builder, anything you need to do to manipulate, you need to take it to the retester. So for example, if you took it to the retester now, and let's say you want to calculate, so let's say you brought this in, so then the trades will be here, and you want to calculate the median. So let's see, median, what do you say, median stop loss? I don't think we have median stop loss.
No, so it's the median movement in the price.
Oh, so that's MAE, maximum adverse exertion, yes?
Yeah, exactly. Yeah. That's like,
so this is the biggest. So we, first of all, we don't have median. Okay, that's the first thing. We only have the biggest.
That's right. Yeah.
So maybe, what can you do with the biggest? You can divide it by number of trades. That also not solve it. Yeah, that's what I'm. So basically, you're on the right path. That's what I ask CloneX to do. I want the median. Yes, I want the median in SPP to calculate everything for monitoring and for. And I know they have it. The reason I know they have it is because SPP uses median, but they just didn't provided it here for us. So maybe like you should like vote for putting, just like they have average here. Yes, they have average, many averages. So put a request for median and then post it here, and then we can go and vote for it. So it gets like...
so it's actually there if you go on the cross checks for SPP. It's cross checks. If you go on SPP.
Yeah, but then you need to do SPP. In the beginning in Builder, you just didn't do SPP. You just starting, you build the strategy. SPP is not done yet.
Yep.
Because once here, the only way to get this value here, it's once it's calculated. If it's not calculated, it's not there. Here, I know we have net profit median, I think here. I remember we have one median. I don't remember which one. Yeah. But again, I know they have it because that's what they use to calculate SPP anyway. They need the median. Actually, it shows up in the graph. Yes, it's always plotting the median and then what your strategy is doing. So it is calculated. It's just, it's not available for us. How about if for 0.1 GPUSD average trades $10? Is that okay? So average trade needs to cover 2 times slippage and commission. That's the standard. So it doesn't matter what you trade. You need to calculate slippage plus commission and then these 2 times 2, that's your minimum average trade. It can be more, of course it's better, but minimum is this. This is the formula for average trade. So then it's easy to calculate on currencies, futures, crypto, whatever you like. Okay, and we have Oliver. Additional market has median in data banks, but it does not. Yeah, so like I mentioned, I've seen it. I know they're using it in SPP. It's hidden, and it's hidden in a way that even CloneX cannot use it. I don't know like what structurally is there, but he told me he's working on it. So let's hope soon. Because once he finds a way, that means it's available, and that's mean now we can do whatever. Because once it's available as a variable, then we can manipulate it. See, this is like I understand SQX dilemma. So SQX is not a development environment. SQX started as this. Not started. When I got into with SQX, this 2017, I think. Probably beginning of 2018. Anyway, when they started, it was this data mining package, which you have building blocks, blah, blah, blah. SQX will look for good things and it will plot. Then they added Algo Wizard as a request, probably an afterthought. But remember, Algo Wizard, its also main purpose is to make you build strategies without programming. The problem is that all programmers know is you need a development environment to check what's happening. Yes, you need to debug the code. It's working properly, it's not. In SQX, we don't have this capability. If I build anything here, if I build a variable here, and whatever this variable is, I cannot track if the variable is calculating properly or not. There is no way for me. I just blindly have to believe this is good. Now, of course, I don't do it. I take it to TradeStation, make sure it's working properly. But for anybody else who is not programmer, I think it's a really risky proposition that you are building something that you don't know if it's calculated properly. Unless you're building something really simple that you can easily check it out in Excel. Okay? But that's the dilemma, is they want to make it easy, but it's not a development environment. So I think at one point they have to do it. I mean, currently they have this code base, but this has nothing to do with this language. So what TradeStation does, it's the same language that you build with, you can debug with. With SQX, here is Java, and here it's this, whatever you call it, Algo Wizard language. So I don't know what's their direction, frankly. If they're gonna continue to provide us to make Algo Wizard into a full environment, or maybe not enough people wanting this, so they don't care. Because remember, it's resources. Okay.
I think they're focusing on the online Algo Wizard.
Yeah, right now definitely they want to switch Algo Wizard to a trading platform online. Not this one, the one that is online. And yep. I know it's with stocks only currently, so I know let's say that takes another 6 months. But still, SQX is not like an overnight operation. So I assume they have long-term vision. So, I mean, I would love that this will become a development environment, so I don't need to go to MultiChart or TradeStation, or some of you go to MT4. It's much better that this on its own become a full environment, because then same data, same logic, and you can take it to trading right away. That's a huge feature. But currently it's missing this development environment. But for simple strategy, like for example, this one, of course I don't need a development environment. I know this one works. I can take it easy to trade. But of course it's still missing the capitalization part. Okay, LT. How about when you have in builder for GPU USD strategy, let's say spread 3, slippage 1, doesn't it cover when those are the settings, or what is the point of setting those? This is the average trade you're talking about, correct? So yes, so you have the slippage and you have the commission. and then you want your average trade to be, yeah, so let's say, so what you're saying is, let's say, what do you want here? Forex and whatever, let's pick. So you want to trade here and you're saying slippage is 1, spread is 3. So that should cover it, yes. And then now when you're doing this, you want your average trade to be what? To be double this. So this instrument, I don't know what 1 means. And I don't know what spread 3 means. Because I don't trade Forex. I trade them with futures. But let me give you the example of futures. And then you can extrapolate that to... Okay, so the ES is, let's say, 5 to get in and out, and $25 to for slippage. So that's $30. So if I put commission as 15 per trade, so that's 30 round trip. So now I cover twice my commission and slippage. So my average trade now should be positive. If it's positive, that means it's already covered this. Of course, you can do this a lot easier, just which you've seen me do it in videos. I do this 0, and because I know many of the futures, so I know ES I need not even 30, I do 37.5. So minimum I need 37.5 in when this trade happens. I need my average trade to be above 37.5 to be profitable. But your logic is correct, yes? You put slippage and commission and you want your average trade to be positive. That means you covered twice your slippage and commission. So twice means, okay, let me put this again. So if you put this, I don't know, let's put this back. So this is 1 and 3, excuse me. And let's say this translates to $10. So then you want $20 average trade. Calculation. No, it does. So you can. So you don't have to calculate it afterwards. You can just. The reason I'm doing this is I don't know what this means, but probably. So if you want it to be included here already, you can do 6 and 2. But this is per trade. So that means in slippage 1, spread 3, out slippage 1, spread 3. Okay? So that's 2 times, because you can decide in commission here. It's also per trade. Per trade meaning one side, yes, you buy, that's the commission for buying, and for slippage and for spread. And you sell, that's another one, that's 2. You want 2 of those. Whatever the total commission and slippage you paid to get in and out, you want twice of those in average trade. That's the general guidelines. Okay? You can accept less and still be profitable, but then you're leaving nothing to noise. So
so Ali, you just saying we need to inflate the number. So if you go back to your SQX, are you saying so for example, my commission is $7 round trip?
7 round trip. So that's 3.5 per side,
yeah.
Because here it calculates only per side. And then slippage
so I
is
need to inflate.
1.
Yeah.
And let's say you're trading futures nodes.
So, that's right.
Yeah. So right now you need to be safe. You need double these. So you need to do 7.
Okay. Yeah.
And
7
2. So this will be $14 in total to get for round trip for commission, and 4 ticks slippage in and out. And that's your safe guidelines, because if let's say your round trip cost you $25, and your average trade is $35. You only have less than 50% of this. So it's a very risky. I mean, this could work. I'm not saying it will not work, but it would be taking extra risk. You can find, like if you look hard enough, you should find double this. So don't don't accept less. Okay, start with 50 minimum, and or more, of course, is better. And I can tell you easy, if your strategy is getting, let's say $35, increase the time frame, it will easily double. Okay, so it's not like it's impossible. It's just most traders want to trade actively. They want to trade 20 times a day. They want to look at charts. It's because the popular view of trading is that it's actively looking at charts, listening to news, and while actuality it's not. So you can easily increase your average trade just by increasing your time frame. And so I wouldn't accept unless double, because with double then you are protected somehow. Yes, something will go wrong, I guarantee it. Something when you're trading will go wrong. This is just part of trading. It's not a mistake, it's not an outlier. When you start trading, or probably you are trading already, things will go wrong. I don't know what, but they will. That's just a fact. So you just need to be prepared, and this is one of the preparation, taking less risk. LT slippage, and so spread. I think probably people here will correct me. I think the spread is the commission, because there's no commission in Forex.
It depends on the broker. So some brokers might charge you the spread.
Yeah, but there is no commission
as well, or they might. It depends on the brokers, because if you look at IC markets, because you're essentially dealing with them, not the market itself directly. So they might add commission as a separate item.
Okay, so
but you're right. So they do have an account where they include commission in the spread.
Yeah. So the concept's still the same. If they charge you commission, then you need to put it in. If not, then you just use spread and slippage. Concept is the same. Is the total cost of in and out times 2.
Yeah, for the slippage, it depends on liquidity of the pair you're trading.
Of course, and also depends on the time you're trading it. So
the time I trade, exactly.
So as like for example, the ES slippage can be 0, let's say around 10:30, because it's so liquid and it's so smooth. There is no news. Once, let's say, news hit, slippage goes to 5. That's. But you're taking, let's say, the average of all, and that's also part why you want your average trade to be double, because the slippage will change over time depending on what time you're trading. And remember the chart, the Excel sheet I showed you that plots the heat map for active trading. That also helps you in deciding your slippage. So if I'm trading during the active hours, then I put 1. If my strategy, like for example, the one I'm building, oil, let's say, or gold seasonality, well, the trades finish at 8 p.m. Well, then definitely my slippage is different at that point. It's not 1 anymore. Okay, so we'll give you a couple more minutes on Monte Carlo. I was reading Tim Master doing the permutation differently. Have you tried using different to SQX? The problem, even if they do it the same, you will not get the same result, because we don't know how. Like with SPP, there are some assumptions to be taken. So we don't know what SQX assumptions are. They don't tell us, they don't show us the code. I mean, even if they show us, I don't know how to read Java. So even if you use different software, they don't result the same thing. What you want is you want to use so for example, let's say here the average trade, you were asking the average trade here. Let's say the average trade here works out to be a good indicator for your robustness testing. Okay? But the average trade calculation might be different. I'm not saying it is. I'm just saying it might be. Let's say, for example, it is different than TradeStation average trade. I mean, it's not. I'm just saying, for example. But if the average trade here is pointing to a robust strategy here in SQX, then that's fine. It doesn't matter how they are calculating it. In SQX, it works. If I take this same calculation out to TradeStation, it doesn't work. I don't care. It works here. So I use it here. So same thing for SPP. If it points to a robust strategy here, and then I take it to TradeStation, or I take it to out of sample and it still works and producing good results, then that's fine. So even if somebody else using it, using SPP differently, or the calculation is different for the same strategy, that's also okay. Don't be stuck with this. I mean, rarely would I put a strategy from SQX and it matches exactly on TradeStation. When I started this was a huge deal to me. And I go back and forth, emails, and I try to fix it. And then I just stopped it. Because if my strategy is robust and my net profit is 99,000 on SQX and 100,000 on TradeStation, I'm happy. If I'm missing 2 trades in TradeStation, I'm happy. It doesn't mean a lot because even the indicator, remember SQX having their own indicators to make the calculation fast. So even indicators are not the same. Like if you have TradeStation or MT4, you import the indicator from SQX, and sometimes they have the same indicator, one in TradeStation, one in SQX, labeled SQX, let's say SQX moving average. It's different than the moving average of TradeStation. Just because they have different calculation to make things faster, so they will have some differences. Okay, LT, favorite topic, can you elaborate that more? One future strategy on TradeStation, how to monitor different strategies. So currently this is a big subject. I can see some of you are frustrated. I can advise you currently, you're just starting, either trade same strategies, like strategy in the same direction. For example, 3 S&P strategies, long only. Okay? If you're planning to trade short and long on the same symbol, don't do it in TradeStation in one account. There are many solutions, but I find it's just you're complicating things in the beginning. In the beginning, I told you many times, focus on trading a profitable portfolio. 5 strategies minimum, make it profitable. So you can do this easily. You don't need to do 10 strategies on SPY. One of those 10 strategies on SPY will work on QQQ or IWM or diamonds. For sure, one of them will work there. So that's solved, okay? So don't like spend too much time trying to solve an issue that frankly you're not there yet. I mean, to trade 5 strategies only on SPY, why? You have literally thousands of markets available. And B Trader says come to MT5, MT4. So I guess, yeah, there is solved. I'm telling you, there are solutions, but in the beginning, why complicate it? Like, for example, interactive brokers, you can open an account that it's managed account that you can segregate strategies inside the same account. But if you open an account with $5,000, they will not do it for you. So there are solutions, but I think they are further down the road. You don't need to worry yourself about it. There are services I showed you, but they cost $1,000 a year. So what, you're going to pay $1,000 on a $10,000 account? It doesn't make any sense. Yeah, 50K account, it is doable. because then let's say you do it with a service that's $1,000, that's 0.5% of your account. So I would do it with 50. It all depends. I mean, really, is this the highest priority you have right now? It is to trade 3 strategies, that long and short, on the S&P 500. If it is, then definitely do it. If it is just an itching thing you want to solve, then I would just postpone it for now. Interactive brokers with 50K, they would, I think they would open an account for you, a managed account or a fund account, where basically you can trade. Basically, you deposit, let's say you have 50 account, you deposit 25 and 25, but they treat your account as one, 50K, but then you trade each strategy on different account, but you still have the 50K as a whole for the margin. SQX without knowledge. Yeah, true. But that's what I'm saying. Is it really the highest priority to trade long and short on SPY? I mean, first of all, short on indexes, I would, if you're just starting, I would not do it. Only long, there's no problem. I told you. Going in the same direction, no problem. So let's say you have 2 strategies going long at different intervals. Let's say you're trading, so say this is intraday and this is daily. Both of them are long. If this goes in at 10 a.m. and this went in at 9 a.m., this one will exit in 2 days. But this one will exit end of day. So this one will exit at 4 p.m. At 4 p.m., the price, this close, at 4 p.m., this will be closed. Okay? So your trade manager will calculate the profit. Most likely it's wrong, yes, because this price in has a different price than here. But when this one closes in 2 days, which will be this one, then your trade manager will be correct. So that's the only drawback. So it works, but if you're looking at it intraday, the trade manager will have the wrong profit and loss. Only when you close the other one, then your profit and loss will be correct. Yeah, no, it will work on 2 on the same direction. You can have as many as you like, same direction, as many as you like, because with TradeStation account, it will look at, you have one account and you're just pyramiding in. That's how they look at it. It doesn't matter which. Actually, in TradeStation, you can decide. I'll show you next time. There is an option to pick if the order is coming from the same strategy or from a different strategy. So you can limit the number of orders on the same direction. But anyway, it's totally doable, same direction. Also, I can tell you this, I guarantee it, on daily time frame, most likely, like 90% of the time, daily time frame long only will work. If it works on the SPY, it will work on QQQ, diamonds, and IWM, which is the Russell. And I also found a big correlation with Brazil, which is EWZ, I think, ETF. And also, I forgot, there is another one in Asia. It's also highly correlated with SPY.
One question about monitoring the strategy. You said, like, let's say we got an average trade of $100 in the development phase. What will you do in the future if we have let's say $50 of average trade? Will you take that strategy for a live account? I mean, what's the actual ratio in which you will take that strategy into life.
Yeah, so good question. And you see why it's a problem if you take the average only or what's a percentage. You see there is a problem. What percentage? And you can solve that with what I told you. Like that's what I'm trying to do in SPP, yes? You need to take the median and the standard deviation. Because what will that do? That will give you a probability curve, not some arbitrary percentage. If this is your median, then you will have somewhere here one standard deviation, and then you'll have here two standard deviation. So not all, 97 something percent will be here between 2 SD, 1 SD, and the median. Okay? So if your average trade here is $100, and this is 20, and this is 40. Okay, so this would be 80 and 60. If your average dollars suddenly gets to 40, well, this is big, yes? There is only 3% that this could happen. This is a huge flag. The strategy could not be broken yet, but definitely you need to monitor it really closely. If it's 30, well, let's go here. If your average trade becomes 50, your strategy is still profitable, correct? But definitely I would stop trading. Something is definitely wrong, because when I did the testing, all my strategies were below 60. Yes, with two standard deviation. 50, most likely that's 3.5 SD. So the probability of that happening in statistical science, it's like, I don't know, 1 over 10 million or something. So, you know, it could be nothing, but 10 million probability says it is something. So, but if you take a percentage, you say, well, if I go from 100 to 50, well, it's still profitable. So then, you know, you don't know. So you need to do this mathematically, just like you're trading. Whatever you're building in SQX, it's all math. You're not taking any discretion in it. So this should be the same thing. Now, I know this could be difficult. And you say, this is too much work. How am I going to do this? This can be automated.